In today's video, I'm going to teach you how to account loan in QuickBooks. We'll walk through setting up the loan, recording the money you received, and entering each payment correctly so your books show the right cash, debt, and interest expense. I'll keep things clear and practical, and you can follow along in QuickBooks Online. First, create a dedicated liability account for the loan. Open the gear icon for settings, choose Chart of Accounts, and click New. For account type, pick long-term liabilities if the loan will take more than a year to repay, or choose other current liabilities if it will be repaid within a year. For detail type, select Notes Payable. Give the account a clear name you'll recognize later, such as Bank Loan, Lender. Then save and close. This account is what tracks what you still owe, separate from your income and expenses. Next, record the loan funds you received if the money was deposited into your bank. Click the New button and choose Journal Entry. Enter the funding date. On the first line, debit your bank account for the exact amount deposited. On the second line, credit the loan liability account you just created for the same amount. Add a short memo if helpful, then save and close. That entry increases your cash while establishing the debt on your balance sheet. No income is recorded because loan proceeds aren't revenue. Finally, record each loan payment so it properly splits between principal and interest. Click New and select Expense. Use the bank or credit card you paid from and the payment date. Under Category Details, the first line should be the loan liability account for the principal portion of the payment. The second line should be interest expense for the interest portion. The two lines together must equal the total you paid. Save and close. Remember, only the interest is an expense on your profit and loss. The principal isn't an expense, it simply reduces the loan balance on your balance sheet. A few tips as you go. Use the lender's statement or amortization schedule to find the correct principal and interest amounts for each payment, since they usually change over time. Add memos or attach the statement to each transaction for an easy audit trail. If payments are auto-debited, you can still use the expense form to categorize the transaction correctly when it appears in your bank feed. And periodically check the loan balance in your chart of accounts to make sure it matches the lender's statement.